What happened to the recession? Hey, it's Eric Osnes here with ericismybanker.com and CMG Home Loans with my weekly update on mortgage rates for the week ending December 29, 2023, my last report of the year. Well, at the beginning of the year, I predicted that we would be in a recession by mid-year at the very latest. I was wrong about that, but so was just about everybody else. The consensus was that the fastest rate hikes in over 40 years would trigger recession, but it never did. Why? There's disagreement among economists on the reasons, but here are some of the most likely culprits. Number one, as supply disruptions caused by the pandemic eased, demand began to match the supply, spending on goods and services increased, and price increases started to ease as well, just naturally. If this is true, the Fed never needed to tighten rates as much as they did. Number two, government spending filled the gap. Massive government spending padded the economy with so much cash that the economy never really contracted. Of course, the downside to that was the government ran a deficit of over 8% of our GDP in 2023, the highest of any developed nation. We may pay the price for this in the future with either slower growth or higher taxes, or most likely both. Number three, higher rates from the Fed didn't hurt as much as expected. Homeowners who refinanced in 2021 or early 2022 got historically low interest rates that kept household budgets somewhat affordable despite the inflation-induced higher prices on everything else. There was still plenty of pain for those with credit card balances, auto loans, and floating rate loans where delinquencies are on the rise. And homeowners with low rates were reluctant to sell, creating inventory shortages which stalled home sales. Number four, bailouts to regional banks offset the tightening. This doesn't get much press, but after the collapse of Silicon Valley Bank, the Fed arranged lending facilities to rescue regional banks, many of which were experiencing serious liquidity crises. That kept the cash flowing into the economy despite higher interest rates. Time will tell which of these theories is correct, but most likely it's a combination of all of them. That said, bond traders have decided that the Fed's rate hike cycle is over and that we can expect several rate cuts in 2024. Mortgage rates started the year around 6.54% before rising to over 8%, but we're finishing the year about where we started, and the expectation is that rates will continue to drift lower next year. Here are the national averages for the week. Conventional 30-year fixed rate, 6.63%. That's down about 0.03 from a week ago. 15-year fixed rates, 5.96%. That's down 0.1 from a week ago. FHA and VA 30-year fixed rate, 6.06%. That's down 0.06 from a week ago. And 30-year fixed rate jumbo, 6.95%, down 0.06 from a week ago. Moving on, home prices rose this year. Even with the headwinds of the highest mortgage rates we've seen in decades, home prices were up for the year. The Case-Shiller Home Price Index, that's considered the gold standard for appreciation, showed that home prices rose 0.6% in October. That's the month when mortgage rates peaked at over 8%. The expectation is that home prices will finish the year up about 7% nationwide. And looking to next year, Fannie Mae and Pulsonomics surveyed 100 top analysts and concluded that home prices will increase 2.4% in 2024 and be up over 25% over the next 5 years. Last year, that same survey predicted home prices would increase 3.3%, so they missed the mark on the downside. And I would reckon home prices in the Pacific Northwest will continue to beat the national averages and be up about 5% in 2024. In summary, our housing industry is okay. Foreclosures are at record lows, prices are rising, and as rates come down, affordability will improve and buying activity will increase. So don't believe any of the scary stories about a housing bubble. It's just not a likely scenario. So let's work on a plan for you for 2024. Sooner the better to beat the crowds. You can always reach me. Just call me 206-915-3742. You can email me, eric@ericismybanker.com, or look for me on social media. Just look for Eric is my banker and you'll find me. That's all I've got for this week. I hope you all have a very happy, healthy, and prosperous 2024. Happy New Year. I'll see you next year.